Hello, everyone. Welcome to NextGen Finance. My name is Michael Petrilli, and today we're joined by Dan Jowett. With more than 25 years of experience in capital markets and wealth management, Dan serves as the CEO of Open Markets Group, one of Australia's most important market infrastructure and trading firms. Dan, welcome to NextGen Finance.
Thanks, Michael. Great to be chatting to you today.
It's amazing to have you on with such a wealth of experience and knowledge. I'm sure it's going to be a great pod.
Yeah, can't wait. Let's get into it. Some
Yeah,
questions.
so Dan, you've led open market groups for the past 4 years, which I'd say is definitely through a significant period of change. How would you describe the unique DNA of the business today, and how does it differentiate from the crowded brokerage and wealth management space?
There's a few different questions in there, and it's a tough one to kick off with. But yes, you're right. I joined about 4 years ago, and one of the great things that I was fortunate enough to inherit when I joined the business was really the people and the culture. And I think culture means a lot of different things to different people. But if I just break that down a little bit, when I joined 4 years ago, we had about 110 people working for us for open markets then. And in that first year, for a few different complex reasons, we had to make a lot of significant changes to the business in headcount and indeed in people. And when you do that to a business, what you typically find is that culture can be damaged. And we worked really hard as a team, a few senior members of the leadership team, to keep all that culture together. And I'm really pleased to say, I think today, when I look back on that 4 years in the journey, that's got to be one of the greatest things that we've still got going for the business here today. We have maybe just a little bit about open markets, Michael, if that's helpful. I think sometimes it's difficult to know who's who in different jurisdictions. And you guys obviously talk to a lot of different leaders in different parts of what they do in the world. So open markets, we're a trading and a wealth management infrastructure business in Australia, and we're a B2B business. So when I talk about trading, that's where we access markets, both domestically and internationally. Domestically, we're a clearing broker on the exchange as well. So we execute and clear about $25 billion worth of trades each year here in Australia, which makes us one of the biggest brokers on the exchange. And then the wealth management, trading and infrastructure, that's really products and services to help support a number of our B2B clients in the advice channel. So we have discretionary accounts, managed accounts, portfolio administration, rebalancing engines, tax engines, those sorts of things to help the advice professionals.
Yeah, open market groups does so much. And I think one thing I want to dive into right off the bat is you talked about when you joined, something you were really passionate about is keeping that culture intact. So can you dive a little bit
Yeah.
more into that? How did you keep that culture intact? What kind of things did you do? Or was it more like a philosophy that you put out to the company?
Yeah.
How did you lead that?
Yeah, great question. Look, first of all, I'll put my hands up and say it wasn't me. It was me and a team. So there's a couple of key people here. I'm not going to embarrass them by calling them out by name, but I think a group effort there. So first of all, we kept the people that we kept in the business when we were letting people go, obviously, were the stronger performers, both technically, but also from a, let's call it, interpersonal point of view. So we had the right group of people to take it forward. But then there's a number of initiatives that we do that sometimes when I speak them out loud, they sound pretty basic, but we know from our staff engagement surveys, and we do 2 of those each year anonymously where we look for feedback. We know there's a couple of things that the staff really enjoy about I'm going to use the word culture again. So an example would be our monthly town hall. We've actually got one today at 4 or 4:30. It's a monthly town hall. So we have half the team probably in the office, the other half are remote, depending on days in of the office and whatnot. But it's a really interactive session. So it starts off me giving an update on the business. So that could be new clients, products, what's been happening. I've recently just come back from a trip to New York and Toronto, by way of example. So we talk about that. We go through anything new in the business that could be of interest to staff. So we just did a small acquisition last week. So the 2 principals from that business are there. So very interactive. We do Q&A. We try and keep it good fun. But we have the business and the strategy in front of our staff every month. We recap on the strategy for the year, the 1 HAG, the 3-year plan, the 3 HAG, and then our quarterly objectives. So what that does, staff know exactly what the executive team are trying to do in the business. And we're pretty honest because we don't always achieve, like lots of leaders, what you set out to do in a particular quarter. And we might go and dissect that. Staff get a really good feel for the leaders and what we're trying to do from a strategic point of view. But then for me as a CEO, what's fantastic about that is that you've got people from the most junior people in maybe an operations department right the way through to the senior management team, all understand the strategy, all on the journey. And that, I think, is almost the holy grail for a CEO. So that's just one thing, the town hall. Another thing that we do twice a year, everybody on the executive team goes out for a coffee with between 10 and 15 staff. Open questions, free to go through anything, and then we switch it around. So that makes sure that if you are in a particular team, let's say you're in the compliance team, rather than just interacting with your compliance leaders, you might now be sat down with somebody from the product team. So you get a different perspective on the business, you get an opportunity to ask different questions, and again, it's really open. So we have this really great culture, I think, internally where staff are, at least I feel staff are motivated, they're engaged, they all understand the journey that we're on as a business. And we're not a startup, but being on that journey and having people behind you is absolutely huge.
Yeah, it sounds great. It's like transparency along with really letting people understand that this is a bigger picture.
Yeah, you might laugh, but I started as a training accountant 30 years ago, which must seem like a lifetime to some people. But 30 years ago, where I was, the partners just sat in their offices. They smoked cigars and pipes in their offices in the afternoon. And junior people would never dare to talk to the partners. And you hear that in today's world, and it sounds crazy, but that was 30 years ago when I started. And the world's a very different place today. But what we certainly find, and I think it's true most places, people want to be on that journey and they want to know.
Yeah, and let's talk about open markets today. And you brought up a little bit about the strategy. So, where do you see open markets really bringing a lot of value over the next 2 to 3 years?
Yeah. There's a question you had there on value, which I can talk to, but then I think that the journey is often around growth. But certainly when I get out and talk to clients, which is one of my favorite things, I was in Toronto, like I said, just last week with, I think they're our number 2 or number 3 client. And to go and see those guys, because we happen to be in New York, is fantastic when you get that FaceTime. But what we hear time and time again about adding the value, what clients seem to value about us, it's really twofold. One, it's back to the people. Actually, it's back to the people. We get told we're responsive. We get told we've got people that are knowledgeable in what they do. And because we're not a huge business, and I don't want to shame the banks here, but often you all know what it's like when you need to call the bank. You're like, oh my God, I'm going to be on hold for 20 minutes and press the keys 20 times. We're not that business. We're very hands-on, and we've got some great professionals in here. So team number 1. And then number 2 is around technology. And what I mean by that is we work with a number of fintechs in particular, and to them, technology is clearly important. And it's not just about API connection. It can be about how we can help both from a product and tech perspective with the particular client. And it doesn't have to be a fintech, help them achieve their strategic objectives where they might not have enough capacity or understanding perhaps of what it is they're looking to do because they're predominantly doing advice, it might be, and they're needing help with a particular matter. Yeah, certainly people and technology are the 2 that stand out when I talk to clients. In terms of our growth, growth is the really interesting part. I think we're quite privileged to be in this wonderful industry around markets and around wealth management. It's one of the best sectors, I think, to be in. It grows. It's got a CAGR everywhere all over the world. It's over 7 or 10%, I think, in most countries. It's a $124 trillion business, I think. The generational wealth transfer that's happening, people talk about that a lot. But we're in this privileged industry. So that makes a business like us well capitalized to grow. And I talked about that shift that we went from being a execution and clearing business to moving into wealth management and products and services. And the next phase of growth for us, which we may get to talk on a bit later on, is digital assets. So 2 things there: tokenization of real world assets, so interesting, and then also cryptocurrency liquidity and trading, which we're not currently doing today, but it's on the product roadmap.
Yeah, and so where do you think is the biggest opportunity going to come in the next 2 to 3 years? Is that the crypto piece? Is that continue to digitalize? Or is that something else we haven't covered yet?
Yeah, I see, and this is my personal view because this can polarize people a little bit. So whether you're a true believer in Bitcoin or whether they think it's a hedge or a store of value, there's going to be a place for Bitcoin and I think some of those larger cryptocurrencies in our world for the next few years, at least, if not forever. So they're here to stay. We're seeing institutional support now. We've got the ETF flow. They're a part of the industry today. Where I think the really interesting play is over the next 5 years is the tokenization piece, because it hasn't even got started yet. And like I said, I was in New York a couple of weeks ago, and actually in that week, we saw two really interesting, but I think really key pieces of media come out. We saw NASDAQ market with its announcement or partnership with Kraken, and we saw ICE, which owns NYSE, do the tie-up with OKX, and I think they invested into OKX. So you've suddenly seen the world's two biggest stock markets make material statements with materially large private cryptocurrency venues. So that tells you a lot about how they see the world happening. Are they looking to protect their patch? Are they worried about the cryptocurrency exchanges tokenizing away from them? I'm not sure, but I think it's a really interesting move. We have, though, I think the biggest opportunity, this is what I see, around what we're calling the tokenization of real world assets, so RWAs. And if you think about it for a moment, and you think about something like a managed fund or a mutual fund, and you think about how much friction there is when you still, certainly in Australia and in many countries of the world, you've got advisors and assistants filling out paper forms and sending in paper forms maybe over email. And when you want to redeem from the fund, you fill in paper forms and you have to wait 10 days to get your money. What is this? It seems so archaic today. So the amount of friction in some products like managed funds, private credit, private equity type vehicles, where you think about what could happen with the benefits on chain, with atomic settlement, the ability to tie up to the registries, the fractionalization for the entry point to some of those products, that's where it starts to get really interesting. And if we're big and bold, we can start to talk about bringing hotels on chain, bringing communities of private housing on chain, bringing tea tree plantations on chain. Those real world assets opening up liquidity opportunities for businesses that might otherwise find it near on impossible to access customers. But by bringing them on chain, there's so much opportunity. And I'm not an expert in this space. People know more than I do. But the more I talk to people at conferences and the more I listen and hear from the community that really live and breathe this space, I think it's going to absolutely change how we look at the wealth management industry over the next 5 years.
Absolutely. And I think over the last few years, another change we've seen is firms aren't just launching like simple trading apps anymore. They're really trying to build investment platforms or financial platforms for your whole financial life. So what changes in the market happened, do you think, that forced that kind of shift?
Yeah, well, they've been around a while now, haven't they, I suppose? So if you go back before the trading apps, it was the discount brokers. And if you go back, maybe that's 20 years now when the discount brokers came out, people were like, oh, this is going to change the world and there'll be no room left for private wealth advice. And that didn't happen. The discount brokers just had a place. And they're still in the industry today, but they've migrated to the really good sort of trading apps a few years ago. And I think to your point, Michael, it's quite right. What happened certainly in Australia, but I think pretty much the rest of the world, it became a really crowded space. And if you are just offering, let's call it a cheap trade in your app, whether it's on the US markets or the London markets, if it's just a cheap trade, there's 20 of you doing it now. And it's almost a race to the bottom with prices. And we service a number of those B2Bs on the fintech side. So the pressure on the pricing gets pushed down to us as the clearers because they want to offer it cheap out. So crowded space. So what happened, I think, those fintechs, those operators look to think about how they could maybe differentiate themselves in a crowded market. And a number have done it in different ways. And I don't know if you really call out names on this one, so I won't call out the name, but you see some of them. There's one that I'm thinking of. They're almost like a mini investment bank in a trading app now. So they've got IPOs in there, they've got secondary placements in there, they've got research in there, they've got obviously the share trading in there, very sophisticated order entry systems. And it's a really cool, fully featured set that they do. Another subset of the market they've gone perhaps down the wealth management side. So they create their own models. They've got balanced and growth. They collect asset management fees. So they're diversifying away. Some are using great tools like AI to help the customer have a better journey, maybe build out the models. So I think, yeah, migrations from just discount broker to trading app and then into what are now much more holistic or sophisticated trading apps morph that way. There are a number of them. They're truly phenomenal, really, truly phenomenal.
Yeah, so it seems like it was two prong, or there were two forces acting, right? There was margins are getting thinner and also more competition. So we need to diversify. But it was also on the flip side, the consumer had this demand that wasn't being filled, right? And so we saw the two come together. And I think for a long time, we thought, consumer wouldn't even want a lot of those kind of things. But as over the last 5 years, especially as everything picked up around 2020 and onward with retail trading, I think that demand has really started to fill in. Is that what you've seen as well?
Yeah, look, I agree with you. And I think there's another really interesting call out, Michael, because you touched on it there. And that is if I was 20 years old 10 years ago and I started on the share trading app doing small trades, let's say I was reasonably successful, but I kept contributing money in and I'm now 30, right? I've grown up. I've probably got a bigger job. I've got a bigger income, but I've stayed on that share trading app. So the trick for the share trading app now is I don't want to lose that customer that might have started with $10,000 that's now got $500,000, maybe more. So they almost need to reinvent themselves as a place where that customer with now a significant amount of money, without losing them to maybe a private wealth advisor, private bank, wherever they might go, they want to keep them on that journey. So when we talk to some of our customers today, they've started now to really think about how they stop those bigger customers from leaving, because for obvious reasons, you don't want them to leave. They're now your top tier clients. So yeah, I think there's been a little bit of that as well. But the interesting thing with that is the customer who started with a small balance, who now has a big balance, they probably don't want to leave the app either. They've enjoyed being in the app. They're quite loyal to the app. They enjoy being self-directed, and you see them then looking perhaps for more content, which is what you start to see. It could be research, it could be education type programs.
This leads right into another question that we have, which is talking about the great wealth transfer, right? When you spoke about being 20 and then 30 and so on down the line, we talk about generational wealth transferring from the older baby boomer generation down into Gen Z, at least in America terms. So what do you think that next generation of investors actually value, right? We just talked about how they do like to stay on their apps. Their parents or grandparents aren't necessarily using that application. Are they going to bring their money away from that wealth advisor, or is there kind of solutions that you've seen involving to help capture that?
Yeah, first of all, if I had the secret sauce, I think I'd be really rich, because I think it's been a problem that everybody's been trying to solve for a long time. And I don't know if anyone's perfectly solved it, but I'm going to give you maybe just a couple of different examples and you can see how much certainly my thinking is. So I used to work in a high net worth private wealth business before I joined Open Markets. And it was often a difficult conversation for the private wealth advisor who had a client, let's say they're worth 5 or 10 million, and they're getting more elderly. And then at some point, there's a bereavement and there is a generational wealth transfer. So if the advisor at that point hasn't made a level of effort to understand who the children are, to maybe even meet the children, it might be quite difficult to get that asset to stay with the wealth advisor. And it's not easy for the wealth advisor to necessarily make connections because their relationship was with their grandparents or parents. So it's not easy to do. If I look at that generation down, I think the point you were making, let's say they've been using a shared trading app for 10, 15 years, they probably don't want to speak to a private wealth advisor. They might go, wow, I'm not going to spend 1% of my fees to you guys. How I do really well myself, I'm going to do it in the shared trading app. So it's a difficult one. But then, of course, some big shops, I'm not going to name them, but one of the world's biggest wealth management businesses, they went and bought one of the world's biggest online trading businesses. So you can probably guess who that is in America. And I think I wasn't obviously across a detailed strategy, but clearly part of that is by having both segments under the same group, I guess, you've got the ability to service both sets of clients. So I think for the bigger businesses, they're really thinking, how do they capture that wallet as it passes through? And there are going to be some challenges along the way in how they do that, because often it's quite a different investment mentality that the customer has.
And when we talk about that conversation of build versus buy or versus partner, that's something that's been discussed for years and years. But I think the way we talk about it has evolved a bit. So, in your mind, what does a modern fintech firm need to look like for someone to consider them as a partner today?
So if we're talking about build versus buy, Michael, is that the question? Yeah. The one thing that's changed the build versus buy debate over the last 12 months is clearly AI. You've seen now the AI from a coding delivery success at a completely different level, I think, to certainly where I ever even thought it could be 2 years ago.
Thank you, everyone, for joining us on Next in Finance. I'm your host, Michael Petrilli, and if you liked what, definitely hit the like button and follow us on ViewTrade. Bye.